Welcome to Chart Detective. In today's presentation, we'll be looking at JP Morgan Chase Nasdaq Equity Premium ETF, ticker symbol JEPQ. Last week, because of tariff, market was somewhat crazy, and we believe that it's a good time to be looking at an ETF like this because it pays dividend. Not only that, you get exposure to the Nasdaq as well, the Magnificent Seven. All right, so let's take a look at the holding for this ETF as of Friday, April 4th, 2025. If we look here, we see Apple is the number one holding, and Apple make up about 7% of that ETF. If you look at the rest of them, you see all of the Magnificent Seven stocks are represented here, right? From Microsoft, Nvidia, Amazon, Google, Meta, all the way down Tesla, which make up about 2%. So why would we want to buy this ETF when the market is going down? If you have been watching presentation from this channel, you would remember that we have said that we follow what Warren Buffett had said, which is be fearful when others are greedy and be greedy when others are fearful. At this time, most investors or traders are fearful, and we think it's a good time to step in and buy ETFs such as this one. So, what are those key statistics that make us interested in this ETF? First of all, it's dividend yield. So this ETF pays about 12.38% dividend, and the ex-dividend date was April 1st, 2025. So the ex-dividend date is the day before which you need to own the stock to be qualified for the dividend. Dividend amount that was paid, about 54 cents for every share. So that's the main reason we like this ETF, because it pays dividend and you get exposure to the Nasdaq. And the dividend is paid monthly. So every month they pay the dividend, and we like to do dividend reinvestment plan, DRIP, and that would compound our return. So let's take a look at the chart. Last year, 2024, this ETF was up about 19%. Remember, you need to add the dividend to it. So the ETF was up 19% plus amount of dividend paid. So it would be up more than 30%. It would somewhat underperform the Nasdaq, which was up about 35%. But long term, because of dividend reinvestment, we believe that this ETF can outperform the Nasdaq. So far this year, 2025, we see that this ETF is trading down roughly by about 17%. And the last 2 days, Thursday and Friday, account for 8%, which is about half of what the ETF is down this year so far. And if we were to look at those two candlesticks, they both are Mobozu close almost, because the closing price for both of them is almost the lowest price for each of those 2 days. Now let's take a look at the relative strength index, so RSI. If we look at October 2023, where the ETF made a low of about $45, the RSI was above 30, meaning that it was not oversold. However, as of Friday, April 4th, where the ETF closed at $46.60. The ETF, the RSI is way oversold, but it's sitting at 21.40, right? Below 30 is oversold, and currently the RSI is sitting at 21.4. So this is greatly oversold. Now, it's even worse than what was where it was in October 2023. So we think that this ETF is about to bounce back upward. Because the sentiment is very bearish, we think that price could still keep on moving down to about $45, where we would find support. Double bottom would be formed there, and that would be a great opportunity to buy. However, before that, we see that we have a trend line right there where the price is close on Friday. We think this is a great opportunity to buy. As a matter of fact, we did buy some on Friday, a small portion, just in case if it keeps on going down. We'll buy a lot more at $45. So we think that price may rebound upward from where it closed on Friday at $46.60. So we think price may move a little bit higher to about $48 and stop there because we have resistance. To be more confident, we would want the price to move a little bit higher. To move above the gap down to right above $49, where we would find under resistance. And this is where the ETF may stop. And to be more confident, we would want the ETF to move above that $49 to $50. So this is all we have for you for today. Please remember to like, subscribe, and share, and use the comment section to let us know if you had found our presentation to be useful. Thank you, and have a great day.